Good morning, everybody, and welcome to Gray and Gray's webinar this morning titled Protecting Yourself Against Employee Theft and Fraud. We have many owner-operators that have joined us from all over the country, so I am happy to see that you are on the call this morning. We're also going to have a webinar this afternoon at 4 p.m. Eastern Standard Time. But I think you're all on here because you know this is actually something that's really happening in your organizations. And the reason why we decided to have a webinar on April 13th, just 5 days before the filing deadline, is we felt this is very important because we're seeing theft popping up in our clients' organizations more so than ever before. I'm not exactly sure as to the cause and why that's happening, but we know it is happening, and we wanted to alert the entire owner-operator community of some of the things that we've found. What's really going to be good about this call, too, is at the end of my presentation, which shouldn't take more than 10 or 15 minutes, I'm going to open up the lines and unmute everybody and give everybody an opportunity that if there's something that has happened in your organization that we haven't shared with you, I think it would be really great dialogue and a great conversation to have so that we can all understand what some of those things are that are taking place. From a technical point of view, I think that if you are on the telephone or have access to a telephone, in the audio section of your control panel, I believe you can enter an audio pin. If you click on phone call, you will be able to see that there's an audio pin there. If you click on the audio pin, that will allow us to unmute you, and we can open a general conversation. There is also an opportunity or an area on your control planner where you can raise your hand and type in a question if you want to. So let's begin. That's me, but we'll just pass over that because that's just not a good picture. Okay. Common areas of theft. So we're going to target 4 different areas in this presentation. We're going to target the cash receipts area of the business, accounts payable, payroll, and inventory. So let's take a deep dive into cash receipts. So what we've been seeing and what we have seen over the last, let's say the last couple of years, but more so now than ever before, is the actual stealing of deposits. And basically what we're seeing now is store managers or people in the organization at the store level actually stealing deposits. But it's very, very important because you as an organization have to make sure that your deposits are getting actually credited to your bank accounts that next morning. Most of our owner-operators have policies in place internally where they're checking to make sure that yesterday's deposits get into the bank, and they're checking that this morning. We as accountants, unfortunately, we don't have access as well, like you have access. So if we're going to reconcile your bank statement, let's say, for instance, a deposit was stolen on March 2nd by a manager. By the time we get your information in April, it could be 30 to 45 days later that we're actually seeing that a deposit didn't clear the bank. So it's really important as organizations to be checking on a regular basis, a daily basis, to make sure that your day and night deposits got into the bank so that we can ensure that there is no stealing at that level. But please be aware that is happening. I also have with me here one of our managers in our franchise restaurant group, Dana Fortini. She's going to add in if she feels necessary, if I've forgotten to say something, because she's working on a daily basis with most of our owner-operators and their staff. The other thing, too, I want to talk about is holding deposits. We're seeing this of late as well. We have a situation that just popped up recently where an owner-operator had a manager that had been working with them for over 25 years. So the trust was there. This person had been with these people for many, many years. And we found out when we reconciled bank statements the following month that 3 deposits totaling of about $12,000 were missing right in the middle of the month. And, we questioned what had happened. And in this specific situation, the manager said she admitted that she had stolen the deposits. And the reason why she did is that her father had passed away. She didn't have enough money to pay for the funeral. The owner-operator had come to me and said, "Mark, what do I do in this situation?" And I said, this person stole money from you, because had they come to you and asked you if they could borrow money in order to be able to pay for this funeral, would you have done that? And they said, of course we would have. So you don't want the managers in your restaurants making decisions about whether or not they're going to take deposits. They should be coming to you. The other thing we see a lot of is this holding deposits, right? So the other thing that we look for when we do our cash reconciliations and bank reconciliations in our offices is we look at the frequency of how these deposits are getting into the bank. Normally, a deposit should get in the next day, or at least be credited by the next day. But a lot of times we may see it take 3 or 4 or 5 days to get into the bank. And that's because, believe it or not, there are people that will take your deposits, use that money, and then put that money back into the bank 3 or 4 days later. Again, the reason why I'm saying this is we're seeing this on our end. So I am alerting you that these things are happening. So that's why it's so important, you know, certainly every morning or at some point during the day, you're at least doing some internal control procedures in-house to make sure that yesterday's deposits actually did get into the bank. Stealing money from the safe. This is something that's been going on for years, but again, we're seeing that more so today. You know, and unless you're doing regular audits of the safes in your restaurants, making sure that those change funds that are supposed to be in there are in there, you know, there's no way for any one of us to actually find out whether or not that money's being taken. So I would periodically, on a periodic basis, look at those safes and let your people in your organization know that you're doing those types of internal control procedures to make sure that money is actually safe. Petty cash. A lot of organizations, especially larger organizations, have you know, petty cash policies where managers are able to go out and you know, buy whatever it is that they need in a second. And we're finding when we look at some of these petty cash payouts that there's some fictitious payouts. The reason why we find that is a lot of these organizations don't have controls in place, and nobody is really looking as to what is actually getting paid for out of petty cash. So that's extremely important that you know where your petty cash dollars are going, and that, again, those internal procedures to ensure that your people in your organization know that somebody is looking at this stuff. Free food given out at registers and drive-thrus, that's something that's been happening for years. I think it's something that we all know can happen, and you know, it's just making sure and putting those procedures in place at the store level to make sure that managers are looking at what's going on, owner-operators are present and around, and kind of have eyes out as to what's going on. Skimming from the register or daily receipts, ringing up cash sales, proceeding to void the sales immediately and taking the cash. We had a situation where we had an owner-operator that had a restaurant in a mall location, and for some reason the food cost in that location was much higher than any of the other stores, and I personally would raise that point to the owner-operator. The owner-operator would tell me, Mark, that has always been the case with this restaurant for the last 3 or 4 years. They've always typically had a higher food cost. And we kind of agreed that, well, maybe it does have a higher food cost, because, you know, I asked the owner-operator, maybe we should dig deeper. And he's like, no, this has always been the case in this restaurant. For some reason, the food cost is higher. Well, over time, it really did bother me. And I finally said to the owner-operator, I said, you know, I want to take a deeper dive here. Do you have a relationship with the manager? Oh, Mark, the manager, actually the GM has had a long-standing relationship with us. We absolutely trust this person. I said, you know what? I want to look at the dailies. Let's bring a box of the dailies in when I come up next month, and let's go through them. Long story short, what ended up happening was we went through the dailies, and we saw the manager of the restaurant was skimming anywhere from $150 to $400 of cash from the registers every single day. We started to go through the process, and day after day after day, it was 150, 220. It was all these round numbers of cash being taken, and because nobody was looking at these dailies and there were no procedures in place, this manager felt that they could do this. Long story short, after spending a full day and a half going through every single daily, we got up to about $330,000 of cash that was taken from that organization over a 3 or 4 year period. Obviously, the manager was immediately arrested, admitted to what was going on, and a very sad situation. So there are so many things that you can do inside your organizations to ensure these things don't happen, and that is to make sure that you have solid internal control procedures, in place to make sure that everything is being looked at. Cash handling at the register, that's been going on for years, and again, that's just making sure that your people in your restaurants know what's going on. Phantom cash registers, that's something that's been going on for years as well. I'm sure you're aware of those things, and it's just making sure that, again, those procedures are in place to make sure these things can't happen. One of the things that we look for, obviously, are outstanding deposits. So when we do our reconciliations, normally the only thing that may be outstanding or in transit at the end of the month, or maybe those 1 or 2 days at the end of the month that didn't get into the bank by the close date of the bank statement. But if obviously there are deposits that are looming that took place earlier in the month, the big question there is, why was that deposit still outstanding? Why hasn't it been deposited in the bank? And that's why it's so important to make sure that on a daily basis, somebody is looking to make sure those deposits got into the bank. Lower than usual cash, frequent use of petty cash. You really want to see what your managers are doing with regard to petty cash and if they're using that frequently. I know, and Dana may have some flavor to add here, but apparently QSR has some theft controls in place where there's actually ways on the cash receipts and sales side of the business that you can actually, have these I don't know what we call them, internal procedures in place.
Yep. So on QSR Soft, which many of our operators use daily or at least monthly, there are alerts that can be set up, and it's by user preference. You can set them up individually so that you can receive email alerts if certain things are outside of a parameter. This can be done on the owner-operator side or manager side, whoever has the login. And there's great tutorials on their website to how to do this, and they're certainly open to different. If you want to see something special that you don't see as a parameter, you can email them and they will help you set that up.
All right, so that's great to know, and thank you, Dana. But so obviously utilize QSR and what they can, add to help you there as well. So let's look at accounts payable. Bookkeepers creating fictitious vendors. We're seeing this an awful lot today in a lot of the owner-operator organizations. So, fictitious vendors, especially in the larger organizations, if a vendor is created, is there an actual procedure in place to get approval to add that vendor as a payee in your organization? So again, these are the types of procedures you can put in place to make sure that that happens. But a lot of times, fictitious vendors pop up. And bookkeepers, the internal bookkeepers can create those fictitious vendors. So it's really, really important to be watching to see who these payees are, and are they legit or are they fictitious? So that's really, really important. Bookkeepers write in cash checks to themselves but records them in the general ledger as a vendor payment. So again, the bookkeeper in your organization can write and cash a check to themselves, but think about it. They'll make it out to themselves, but in the general ledger and in your software, they will make that check out to a different vendor or a legitimate vendor. So that's obviously something you want to look for. How about bookkeepers writing duplicate checks and then cashing them in their ATM machine? I want to pay note, we're seeing a lot of this. I've seen it in at least a handful of owner-operator organizations of late. And this is something that banks are trying to improve on, but believe it or not, you can actually deposit a check not made out to you into your ATM machine, directly into your account, and the ATM machine will record that as a credit, and that money will be credited to your account. The ATM machines are such that they pick up the account number, the routing number, and the payee amount but they don't necessarily look at the pay, I'm sorry, the total amount, but they don't look at who the payee is, and there's no verification. So that check through the ATM machine gets deposited and credited to their account. Banks are aware of this, so I would really check to make sure that your bank that you're using certainly has those policies in place to make sure that any ATM deposits, they're actually verifying the payee. But the question is that the bank that your employee may be using may not be your bank. So it's really, really important to look for these duplicate checks. And we look for that on our end when we go through the reconciliation process. The other thing we recently saw that we're alerting to is a bookkeeper. And these, by the way, these aren't all in one organization, but these are in several different organizations. A bookkeeper will purposely overpay a bill, thereby generating a refund, and then once that refund check comes in, they take that check and they cash it and probably put it into their ATM machine. So again, the bookkeeper purposely overpays a bill. Let's say you have an M&R invoice to Equipment Repair Company for, $1,145. They may write the check for $1,445. You probably wouldn't see that or wouldn't notice that large of a difference. The company would probably say, you overpaid us, and call the bookkeeper. The bookkeeper will say, that's fine, just send us a refund. They'll take that refund check and then deposit it into the ATM machine. So again, it's really making sure that you have all those internal procedures in place in your organization to ensure that these things don't happen. One of the things we look for is the outstanding checks in the same amount, or outstanding checks that are older than 60 days. So these would be checks that were written but didn't clear the bank statement because they never actually made it into your bank account and they went into their own bank accounts. Again, like I said before, who has the rights to create new vendors? Very, very important. And this one's huge. Segregation of duties. Make sure that the person that's writing your checks is not reconciling your bank statements. So that's an audit procedure. So when you hear of businesses getting audited and needing audited financial statements, that's one of the basic audit procedures that we would perform, or anybody would perform in auditing a set of financials, is segregation of duties. Making sure that people that write checks aren't reconciling bank statements, because that will help to prohibit any sort of fraud or collusion that may be taking place between employees in your organization. Payroll. Again, a big area. I'd probably say, Dana, probably the area that we're seeing the most fraud in right now.
Fastest growing, yes.
Fastest growing. So, fictitious phantom employees. This is something we're seeing more so than ever before. How does that happen? People that are doing your payroll, especially if payroll is done in-house, are creating fictitious and phantom employees. It's happening not in one organization, it's happening in many. You really need to be aware of what some of the procedures that you could put in place to ensure that this doesn't happen. And that would be that within your payroll, there needs to be some sort of an approval process as to new employees. With regard to social security numbers, names, addresses, whichever way that you can make sure that if a new employee is added, there has to be some sort of an approval process that takes place.
You could actually suggest that on a monthly basis, your team or your payroll company sends you a new employee ad list, so that you can certainly make sure those are legitimate employees.
Right. Great suggestion, Dana. So you can actually, if you're using an outside payroll company, ask them provide you with that report on a monthly basis, what employees were added. And that way you can look at it to ensure that these people are legitimate employees. Collusion between the manager and the employee. We've seen this. Manager adds fictitious hours to the employee's paycheck, and then they split the money. This happened recently in an owner-operator organization. So again, it's something to be aware of. Employees take a photograph of their payroll check with their cell phone and deposit it through mobile banking. Dana? Ton of that, right?
It's a ton of them, and some banks have gotten a little better with this and not allowed the duplicate deposits to happen, but some have not. So we know that it's a quick, easy way to get the deposit in there. They'll take a picture of their check and deposit into their account. there's not a lot of procedures in place on the bank side to deter them or stop them from actually depositing again in an actual bank. So they walk in a couple of days later and do it again. The only way to really see that on our end is when we're reconciling, we'll see the check clear twice. It may be in the same month, it may be in 2 separate months or several months apart, but that should be something that we're looking for or you're looking for. Anytime there's a duplicate check number and amount, we do have people who will go in and change the dollar amount slightly. Again, it's up to the bank to read that check appropriately. So if they're changing the amount by $100, it will look like a different check. It might even have the same check number, but the amount's different. So that may go unnoticed as well.
Right. We just had a situation, one of our employees just told us this morning that they caught an employee who had a check that was 3 years old, and believe it or not, that 3-year-old check redeposited into their bank account through mobile banking. So, you know, obviously looking at these banks, these payroll bank statements is important, but again, making sure that you have policies in place to make sure that these things don't happen. So what can we be alert for? Obviously the accurate employee counts, who has the right to add new employees and or hours and or rates. This is something that a lot of companies do. Consider implementing random paper check pay periods, right? So if you're not doing paper paychecks, you know, you say that, okay, the first week in May, checks are all going to be done on paper, right? Instead of direct deposit or whatever other means of paying your employees, it's done on paper. And that way now you can actually see these checks, and these checks, the managers can actually hand these checks out, or you can have your director of operations or yourself can hand these payroll checks out to make sure that there are actually legitimate employees. So that's definitely something that you can do. Review check registers and direct deposits for new employees each month. And the other thing too is, and this may be not just for payroll fraud, but just in general, switch managers in your restaurants periodically, you know, for several reasons, right? It could be for inventory control. It could be for any of the controls that happen in your organizations. It's not a bad idea to just move people around. So, any follow-up questions with regard to today's webinar? You see my email address. You also see my telephone number. Feel free to give me a call, even though it's tax season and we're still a little busy here with preparing tax returns. Your questions are very important to us, so we definitely want to answer any questions or concerns you may have in your own organizations. Having said that, again, you know, be on the lookout. One of the things that we're going to be doing is probably having a future webinar once busy season is over and taking a deeper dive into each one of these areas. The other thing that we can do is we can come out into your organizations and we can provide some of those internal control checks to make sure that you have policies in place. And it's really good that you bring us in too, because your people now see that somebody else is looking rather than just yourselves as owners of your business. Again, thank you very much. For those celebrating holidays this weekend or this week, happy holidays to you, and look to see you in the future. Thanks again for calling in today.